journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, we're going to take a look at technical analysis here on the side of the hogs. As you can see here, the hogs have made a 1.618 expansion on the long-term daily. You can see the ABCD pattern that is filmed here. You can see all of these ABCD patterns coming together right here. What I've done now is I assume that we are going to have a correction, much like we did right back here. So this is where we are right now. This is where it's trading at. It opened at 105.25. It's trading at 105.10. Okay, now your profit objective on this, folks, believe it or not, is 15 cents. 15 times 400 is $6,000, and you're risking 106, which is $350. So you're risking about $350 to potentially make 6,000. That's not a bad idea. Now let's just go back in time and just check technical analysis in hogs. This is incredibly liquid, folks. It's traded by all these hedge fund guys. There, as you can see, there was your first 382 pattern right here. And we had a really big correction. This is very similar to this one. As you can see, it's all lined up just about as nice as it can be. That doesn't mean it's going to work, but at least that's what it looks like. So that's the main thing of what we're watching right here. We've got so many things to cover today. We're going to be able to cover it, I think, without too much trouble. But let's get down to the really nitty-gritty, and that's a thing that they're talking about, and that's with the U.S. dollar. Let's get up here, and I'll cover the grains in just a second. The wheat was very strong early in the morning, folks. As you can see here, we bought more wheat. If you remember, down here at 72, it got up here to 85 here today, folks, which was a $600 profit. But we're playing this for a much longer thing, so our stop is going to be remains our right down here at 69. Okay, we bought it at 72 and actually 73. It did have a $500 profit. Remember, we covered it in here. We made a big profit on that, and so all we did was buy it back here at the 382, and now we're ready to do it. I'll cover the soybeans in just a minute and the soybean oil, but first I need to really go through and look at the thing that we're watching here in the stock the foreign exchange market. Now this is the British pound, folks. This is, let me just get this up here on the daily so you can see it. We are banging up against the same level right here. You can see we've rallied up today. We made a 78% retracement on this right here. Now, the reason why I'm bringing this up is because the U.S. dollar is in the news quite a bit because the bond market is under attack. Jamie Dimon came out today, from J.P. Morgan and said he was really concerned about the bond market, and he thought that the rates were going to go north of 6%. If they go north of 6%, that means they're going to go to 7 or 8. So you've got to be really careful being long the bonds, and we're very bearish the bonds, and we'll cover that in just a moment. But first, we want to look at the dollar index, and there it is right here. We'll pull this up, and you can see here they banged it down again today. We came down. Hold on just a second. Doggone it. This is not good. Hold on just a minute, boys and girls. There we go. All right, now here's where we are. This is the dollar index today, folks. Hit the 78% retracement today. So it's not the end of the world like everybody's talking about. If we get below 96.50 down in here, that's the end of the world, because that's below that on the long-term weekly chart. But that's not that. You can see we've held this today. So the euro and the pound still have a chance to back off a little bit. They haven't made new highs today, as you can see in the British pound. Well, we haven't made new highs from the previous high. Now let's take a quick look here, and we'll look at the euro. And that's another one that we want to be watching, because here it is right here. You'll notice as we came in this morning, it had a pretty big Friday night. You can see we were coming in to a pretty big low. Let's just do this on the hourly so we don't have to waste any time going back. But there's where we were. Now you notice that we took out the highs of last week in the euro. That's very important. We didn't get above that 115 level, but we took out the highs of the previous week. You remember we made the ABCD move to the downside right here. We talked about that last Thursday. You'll see there's where it was, right on the old money, right there at the bottom. Okay, there's your 382 retracement. And let's get this out of the way. And here's where we are today. Over the last few days, what we did. Now, here's where we're coming in Sunday night. Sunday night, we started higher, and we never looked back. And the reason why is if you look at this, this gave an ABCD projection of up to this level right here, which is about the almost 115 exactly. So we might get to that level right here. But here's where we were Sunday night. Here's where we are Monday. We've been going up steadily all morning with this as a potential spot to look at. If we look at this on the daily, you'll see there's that old high right back here. That's a long way from where we are, folks. So the fact that that dollar index stopped right where it should tells us that maybe this is not going to get any higher than this level right in here. So that's the whole key. Folks, if that dollar index gets below 96, that's going to be really bearish, and that means we got high inflation coming, and that means that interest rates are going to be going higher and not lower. And so those are a couple things that we want to pay really close attention to as we watch these things here unfold here. All right, now we'll move over here to the soybean complex. You remember here we talked last week, we talked about December soybean oil. And here was December soybean oil. We expected it to get down to this level right here, and we are there right now. That number was 56.99. The low today was 57.10. We're almost at that level right now. You can see 57.22, so it's almost exactly on the low. 57.09 is the ABCD 50% retracement. Now, it's got to hold this, because if it doesn't, this is new crop soybean oil, folks. So if that doesn't hold, that tells us that that idea that we have that maybe this is going to be a year for a good drought, then we really don't know that. Now, remember, we did do something, and that is that we bought, of course, we bought the wheat, and that seemed to be working okay for a while. It still is. But here was the one that we liked the best. Let's get this hourly chart up. This was the November beans. Let me get the daily so we can see this. Well, you can see it here. There's your ABCD pattern right here. Okay. That's your ABCD pattern going back to this level right back here. So there you can see there's your November soybeans making the ABCD pattern down into this level right here. If we go to the daily chart, which we've been watching, you see I suggested we're going to buy it right here. Okay, and the stop has got to be at 506. So right now it's not looking very good. It's got a $500 loss in it. But you're a farmer now, and I'm saying that maybe this is going to be right, maybe it's going to be wrong. All I'm saying that we've got to put our stop in right below there. Okay, so right now it's setting with about a $450 loss, and it's down 1, 2, 3, 4, 5, 6 days in a row. It looked like last night it had a chance, but weather pattern changed. Now we're going to take a break. 877-927-6648.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Okay, folks, we'll take a look at the stock market. You can see there's the high we made on the 29th. We came down. We rallied up to the 50% retracement. We're testing it again last night. We came down on Sunday night, stopped exactly at the 78% level. We did it hold on, folks. There must be a problem going. You know, what they've done, they've changed Discord. What I'm doing, what I usually do, they're not giving me the same thing. So hold on, I'll try to do it again, but they're not. See, they're showing me applications. They want to do entire screen, and that's what I try to do. And I hit share screen, and let's see if it worked right now. Let me know if it worked, Al, if you would, please, because they've changed the format. And when you change the format in the Italian parlance of oh my God, I don't know what to do now. Hold on, I'm sure it's wrong. Okay, it's working. Yay! There we go. We did something okay. Okay, now you can see here, we're looking at this just on a short-term basis. Now, remember, folks, historically, and this goes back a very long time, the 2 most positive days of the month in the stock market that's been this way forever, because it's been going up forever, are the last day of the month and the first day of the month. That's when the checks come in. That's when the checks go out. That's when the buying starts. So there was your last day of the month. Here's your first day of the month. And I don't think we're going to get much above this level right up in here, but we certainly could, because if you just did this on a little tiny ABCD move, you'll see we could easily make that level right up here. And if we got there, that would be pretty much like a head and shoulders pattern. There's your left shoulder, there's your right shoulder. Not too much symmetry there, but that's what it looks like mathematically. We've had a very strong rally here, 50 S&P points here since we made this low about 5 hours ago, 6 hours ago. So it's having still a pretty good run. Now the Dow Jones is running a lot less. We'll get it up here and take a look at it right here. You'll be able to see it, and there's where we are right now on the Dow Jones. Let's get the hourly up so we can compare apples and oranges. There's the same thing. I'm looking at a possibility. We made that level here. actually on Friday. You can see we did hit that number, 42439. We came down. Now, we took out these lows, but we did not take this low out. And look at our rally here. So far today in the Dow Jones, and it's been the weakest. Okay, let's just clean this out right now. By the way, the hogs just made new low on the day. So if you did the hogs, well, maybe it'll work. I don't know. It's only probability. And you can see we've hit the 382. Not quite yet. It's right here at 422.24. We came really close, and we still might be able to do it. You know what, folks? I made a technical error here. Just a minute, folks. I have to turn the hogs off, or they're not going to stop. And I like that stopping because we happen to be short that. Let's get this up here so I can get this here. I just need to turn this off. As you can see now, they're down about 50 points from where we sold them. Let's get up. Oh, sorry. Let's get this back here to where we were with the YM. And I made a mistake here, folks. The 382's got to be drawing off of this. From this level right here, okay, you have to do the retracement. But because this level is lower, look, you see, it went up made a 50% retracement on Friday. That's what it did right on the close. If you remember, there it was right there. 61. There's your ABCD. And then since that time, since Friday, you see the market has come down. So you have to redo this because you've taken out this low. And that'll tell you that the rally back looks like it's been exactly 61% so far today. We've hit it 1, 2, 3 times. That's we're 100 points away from it right now. And that means if this breaks out and we have another move, then we could easily do something like this in the market. Okay, so there's a possibility we could take this high out and get that one and still be bearish. But this is what we're looking at. Short term, trying to keep the losses small. That's the whole reason of what we're doing this, is to make sure that when we do these, that we have a situation where we don't have to risk very much at all. Just like in wheat or hogs or whatever, we'll have to see what's going on as we see this move unfold. The big news from my perspective technically is the fact that silver has broken out. I mean, it's broken out big time, folks. I mean, this has got some real bullish ramifications because look at this. You stay here for 2 weeks and you can't even take out the previous week. Well, you took out the previous week's low by one penny. And then look what's happened here. We've rallied $10,000 in the silver here. Now, of course, we've rallied more than that in the gold, but these are telling you that these things are not backing off. And with that big ABCD we had in gold, just recently, 7 or 8 days ago, completing that big ABCD, this thing could go a whole lot higher. So that's what I'm trying to point out to you. And this means that maybe inflation is going to come. Well, if inflation is going to come, I can tell you one thing, folks. There's not going to be much of a sell-off in some of this stuff in these grains, but right now that's what's happening because the weather pattern just changed, and I noticed that we had a big move here in corn here early this morning. I want to see if we got the corn down. We haven't got there yet. This is the reason why we sold off today in the grains, is because corn, you can see, was higher last night, and then it started to sell off quite a bit. It sold off about 6 or, well, let me see. It sold off about 7 cents here so far. So we've got a chance here that these corn could get down to this level right here. And I would be a buyer at 429. Right now we're trading at 437, but we're already long wheat. So if you're long the wheat, you don't buy the corn. You just stay in the wheat. Wheat's been the strongest. You don't want to cover yourself too much with grains, because if you're wrong, you lose on everything. So you either got to pick the one you want to do, either soybeans, the wheat, or the corn. We picked the wheat because it had been good to us, and we made $1,100, and we're still up in it, still acting okay. Here it is right here. We bought it at 73. It's trading at 76. All it did this morning was complete this ABCD pattern almost exactly at the 786. And it's really hard, folks, to not take a profit here because you're up $600. Now, if you didn't, you gave $500 of that $600 back today by not getting out. But I can't be that active. I mean, I just can't send that out, because if you get out here and it goes higher, doesn't make you feel good. So you got to stick with the program that you're doing, and that's what it's tough to do, but that's what we're trying to do as we watch these things unfold here. Okay, so all right, let's move on to one other one that I wanted to mention here. We've covered the dollar index. I wanted to cover the Australian dollar, folks, because that's the one that could be the sleeper from the upside. So here's the Australian dollar. We're going to do a couple of these currencies so we can see here, and that's exactly what we're seeing here. You can see that your Australian dollar starting to pick up speed today, up about 60 pips. This looks very similar to silver, folks. Can't even make a 382 retracement in here at all, and we're starting to move higher. If you look at this on the weekly pattern, by golly, it doesn't look very bearish to me. Look at that. This has a big move right here. No 382 pullbacks in here. Telling you the Australian dollar is pretty good. Now, the other one that we've nailed pretty good was that Japanese yen, and we're going to get it up and take a look at it right here. Here's the Japanese yen. This was a relatively easier one because it was doing exactly what we thought it was going to do, and it's still doing that, and we'll get it up here right now. There was a move that we had. You can see it's still in a big downtrend here. All right, we had the big ABCD here about 2 weeks ago, 10 days, and look at the pullback here this last week that we pointed out to you, right at the exact 61% retracement, right there on the money. And here we're heading down, dollar weakening against the yen, should be getting down into this level right in here. We'll be, being good to talk, so.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, we're going to take a look at these grain markets because I am very, very bullish of stuff. It ain't working right now. Well, the wheat's working, but meal's working, but and so soybean oil. But this is July soybeans. These are the ones that are already in the bin. They're selling these. Now you went up $5,000. You pull back $2,500. You're sitting at a perfect ABCD right here. Now we elected to go with the November because that's new crop and it's just being planted, so it's affected by weather. This is not going to be affected by weather at all. This is affected by the dollar and exports and stuff like that. Now if we start closing below here, that's a sign that maybe something's not correct. But when you look at the overall picture, and as we look at this, let's get up here and make sure, well, get rid of this Australian dollar here. And I want to show you what I'm watching here as far as how these things are unfolding. There is the December corn. You see, December corn could easily come down here below the 786. We could easily make a new low down here. And that's where I would be looking to be a buyer if that happens. Now, the weather is really good, and maybe this is going to be the low for the year. Maybe it's going to go down forever. But I tell you, when you look at the bonds, when you look at the meal, which is December meal, which is the new crop meal, this is, it hasn't even been, they haven't even begun to touch this stuff yet. But here's the December meal. We'll get the daily up on this. As you can see, we can't even take out yesterday's low, folks. This is not bearish. Look. The low of last week, we haven't even done that. This is still pretty good. Remember, folks, we bought this back here. We sold it up here, and we bought it back on the pullback. So, my goodness, this is not looking bad at all, for heaven's sakes, okay? So, this is what I'm looking at. I can't tell you enough that I'm watching it. The key one today, looking at the complex, is the soybean oil, the December soybean oil. Let me just show you. I really like this, folks. This is making an ABCD, okay? As a matter of fact, it never even got to the number because the low today, let's just double check. The low was 27.10. It was supposed to go to 27.09. It's now it's 47, excuse me. 47.09, 10 was the low. It was supposed to go to 09. Now we're trading at 47.23. You're down 1, 2, 3, 4, 5, 6 days. Last time you had one of those, 1, 2, 3, 4, 5, 6 days down. So these are similar moves to the downside. Let's just see if there's any similarity. No, this one has been much stronger to the downside. That was this move. And you can see, well, oh my goodness, they're not very close. You see how close these are? So this is telling you this is still a bull market. So I have to be I didn't buy the oil. I said to buy the meal or buy the November beans, and that's what I did. I bought November beans at 27. That's where they are here somewhere. Here they are right here. And they're trading a nickel lower right now. 10 cents lower. So I have a loss in that, and I've got my stop working right down here, okay? So that's what I'm looking at. So maybe it works, maybe it doesn't, but that's it. However, if you did the hogs, you've made up for that loss, that's for sure. As you can see, here's hogs. Let's just get this up here so we can see another funny part of the day here. See, having a pretty good move down in the hogs. There's where they opened. You can see you had a really great fill up here, 105.40, and now it's down about $300 or so. Not a big deal, but at least it started. If you get above 106, this is wrong, folks. If you get above 106, this means that this pattern that we're looking at on this long-term pattern is not going to work, and that profit potential is bupkis. But all we have to do now is to get it to close below this level right here, which is 103. That doesn't look like it could, but it didn't do that before, and it didn't do that before. But once it does, once we get below 103, let's put this on the list here, that's when you want to start adding to the position, because that means you could have this really nice Whoops, that's not the one. Really nice profit potential on this move right here would get you right into that level, and then you've got bucks galore if it does work that way. Okay, now let's switch over for a second on crude oil because it's getting a lot of action because of the things in the Ukraine. There's where we were Sunday night. As you can see here in the market, well, let's get this up on the hourly so we can all talk the same language. And there's where we were Sunday night right here. We gapped up. You can see we had a huge gap. Well, not a huge gap, but it gapped up quite a bit. We have, I'll show you one thing. We didn't even have a 382 retracement on this over the last few days. There's the hourly chart. In fact, it's going for the month. The whole month, we finally got a 50% retracement here, I believe, here on Friday. There it was, right at the 50% on Friday. Stopped right there, closed right there, and then it gapped up. When it gapped up above that 382, it told you that it had some power to the upside. If we looked at it on just on a short-term basis, the market had a big run up. You can see we rallied from 30. It rallied almost $4 a barrel. That's almost $4,000, folks. And then it went from 64, dropped $1.50 a barrel. Now let's see if what we talk about sometimes work. If we have a real strong trending market like this, all I say is look for one thing, folks. Watch either up or down. Watch for the 382 market. I haven't done this yet, but I'm going to do it right now. And we miss it by, 30 was the number, 29 was the number. It got to 40. It missed it by 10 cents. So far, we might still get there, but it misses it by 10 cents. Can't do anything about that. You got to shade it if you're going to do it. Rallied $1 from that level, but that's didn't quite make the 382. That's even more bullish. Okay, all right. Now we'll get back, and someone's asked a question about the British pound. I want to get this up here because we made a lot of money a few months ago, last 6-7 months ago, on this big pattern in the British pound, and they're asking if that could possibly repeat. If you remember way back here, when we made this level right here, we were 134 is where we sold it, folks. We covered it at 122. It went to 120, but we covered it at 122, which was the 382 in the long-term weekly. Now we've had this move right here. Here's what I'm waiting for. You see this big ABCD pattern here? We're in the new high grounds. We haven't backed off at all. You see, there's not any weakness coming in here as of yet. This high is 135.84. That's only 60 pips from where we are right now, folks. There's nothing bearish about this, okay? All right, let's move on here and get this out of the way. You can see there's where we are, and then we're going to keep an eye on it. That's at 136.50. That's another 100 pips from where we are. If we get to that, then you got this much larger ABCD pattern that could fill it up in right here. We look at this on the monthly basis. You see, this is a big deal, folks. This thing's been in a downtrend for so doggone long. You can see that all this is doing right now. You can see it looks like it's really super bullish, but this is a bear market rally. You got all the way down here to par, and then you had this retracement here at 120. Here's where we are right now. Let's just refresh this, and we'll see where we are here. We'll be right back, folks. There's where you want to be looking if we get there, but I don't know if we will or not. We'll see.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, we're going to look at the NASDAQ. As you can see, the NASDAQ has retraced from a high. Remember, there was our low here on Friday, just a little below the 618. We've now made the ABCD pattern right here. Okay, so that's what we're looking at. And also, John is just alerting to us that the fact that we talked about before was the fact that let's just get this up here because the stuff that he shows is usually very, very good. So let's get over here and let's get up here where John is, and he's going to be sending us this file here. And I want to show you the standard deviation here in the gold here today that we talked about. There it is. Oh, there it is right there. And you can see here, that's the one standard deviation on the weekly mean. That's at 3406. So that's an important thing. That's right out of the Floor Trader's Handbook that works really well with time and some of the prices that we have. Now, this is the NASDAQ. Now, let's take a look at the Russell. Now, the Russell is a good one to trade because it's the second highest of open interest. And we'll get this up here. There it is right there. We use it hourly, just like we did on everything else. And you can see here, here's the Russell. It's, shuck the front door, sir. Just a second. I can't take care of this right now. That's Steve. Okay, thanks a lot. Okay, hold on a second. That's neighbor, folks. Okay, here's the Russell. And as you can see here, this is the same hourly chart. Last night we made a low right down here. Let's just see where we are, because there was our high right here. You can see how much weaker it is. Russell is far, far weaker. We're going to look at this. So there's the low we made. Now, we made a lower low here. Okay, and you can see that. That was almost exactly at the 61% retracement. We've had a pretty good rally. We rallied about 30 handles. Now, let's just see what the 382 is off of this high right back here, because that's going to tell us if it's doing a 382 retracement. So you go from your high down to your low, and look where the 382 was today here. Right there, folks, within 2 points of the exact 382 right here. The high has been 74. This is 2075, misses it by 1 point. Here's where we are right now. So the overall market in the NASDAQ and the Russell is weak. So that's what we're watching as we look at this as we're watching here today. So we're going to get both of those out of the way here, and we've been asked to take a look at a couple of stocks. We've talked about Apple because it's always out there. There are three of them that we're going to be looking at are Apple, NVIDIA, and Tesla. Okay, here's Apple. We'll see if it's up or down today. It's actually up a little bit, and you can see here's where we are. It's had a big break to the downside. The rally back was basically 50%. We had a rally here today and Sunday and today. Today on the 2nd. All we've done is to do this. So it's really doing very, very little. All it's doing is rallying back to the 382 level that it was at before. Now, if we take a look at NVIDIA, which is also one that's always watched by everyone. And believe me, I don't know anything about stocks. I never said I did, and I don't think I will. Okay, here's the 60-minute. There's where we are. You can see we're down. We're down on Friday. Okay, here we are coming in on Monday. We're having a nice rally. Let's see where the rally goes to. From the high we made back here on the 29th, we're rallying up just a little above the 382. 382 is at 137. It's trading at 137.68. Okay, now the last one we'll look at is Tesla, and that's this one right here. And we'll see what's down. Whoop, well, they hit that pretty hard today here. Here's Tesla. This is the 60-minute. Let's look at the daily because that's what we've been following it on, because we had that nice rally right up here to that 50% level. You can see now here's another example of the opening price, folks. See the opening, it opened near the high of the day today, and now it's been down, so that means it's got a bearish bias. Opens near the low, closes near the high. Opens near the high, closes on the low. Opens on the high, closes on the low. So if this one opened on the high, should close on the low, and we're closer to the low than we are the high. So that's why it has a bearish bias. So use this. If you happen to be long this stock right now, you're below the opening price at 343. The odds of you making money on this the last 3 hours is not very good. It does happen, but the odds favor it will go lower and close near the lower end of the day. So opens near the high, closes near the low. You can see these are just amazing, folks. I mean, it just does this over and over again. And you can see it. Look, there's your low, there's your low, there's your high, there's your high, there's your low. Look at this. Opens on the low, rallies all the way up, and closes on the low. And that tells you we're going to go lower, and boom, that's what it did. So that's where we're watching the three stocks that we're paying attention to today. So we'll get this up here, and we'll get rid of NVIDIA. And then what we want to do, because we've only got a few more minutes left here in this segment, we want to check on the things that we're doing. Here's one that we've liked, that we trade quite often. Let's just get this. This happens to be a natural gas, folks. This happens to be the AI program that we've been watching. It should have topped up in here. What we were doing this morning was looking at this on an hourly basis. And as you can see here, we had a pretty big move, gapped up here a Sunday night, a big gap up, folks. You can see here, it just exploded to the upside. As a matter of fact, one of the things that I was looking at is the fact that we had this big move here, and you can see here in the middle of the night here, we came up and we went through the 382 like it didn't exist, and then it went up, okay, and almost made the 786, and now that's where it's trading right now at the 61% retracement. So that's all we've got right now is the 61% retracement. There's no ABCD here or anything at all. So that's what I'm doing. And this is where I sold it. I sold it right here at 368.50. 368.60 is where I sold it. And it's 10 cents in the $10 into the good. My stop is right above there. So that's it. It went against me as much as $400, and now I'm back to having a profit in it. Okay, so that's what I'm watching in with the natural gas. Okay, now let's move on here. You can see the gold continues to move higher. That number, that there's the one standard deviation, folks, but this is such a breakout in gold and silver, folks. These do not look bearish, especially that silver market. And silver, even when gold was dropping $300, silver couldn't even back off more than 70 or 80 cents. That was, we talked about that several times. It was acting pretty good. And look at this little pullback. There was your 135 pattern. That had $135 in it. That's only a 382 retracement off of there. That's how bullish that was. That's going to tell you in the gold, it looks like we're going to go a whole lot higher. There it is. There's your ABCD. Well, we could easily make a new high. That's a double top up there. That's only 120 bucks away. We could be there in a couple days. From 40 there, we could easily be there very, very quickly. So that's what we're watching here in these metals. They're looking pretty good. Folks, if these metals are going to go higher, these grains are not going to go much lower, because that's part of inflation, and that's what I'm looking at. So hopefully that'll be the thing that we want to, be paying close attention to as we're walking through here today. We got 37 seconds to go here, and let's clean this up a little bit so I can see where we are with everything, and we'll be right back after the words from our sponsor.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Okay, folks, the most important market is, of course, the bond market. That's interest rates. And as you can see here, we've been in a bear market for 5 years, folks. They tried to tell us about negative interest rates back here in 2000. Give us your money. We're not going to give you any guarantee that you're going to get it back, and we're going to charge you for holding it. Boy, that was a good deal, wasn't it? How many people, well, let's move on. As you can see, we've not had much of a rally here for the last couple of years. It rallied 10, 11 points, 12 points. We're heading lower. We get below here, folks. This is what Jamie Dimon was talking about. There's a problem in the bond market. We start getting below 107, folks. We start getting below 107, you're going to be looking at possibly 97. This would be an 8% rate in bonds. Now, what is an 8% rate going to mean to inflation? Okay, that's what easily could get to is right there. That's what Jamie Dimon is talking about. On the long-term scheme of things, it's probably going to be a bullish spot right there. But right now, it's not looking very good. It hasn't looked good for quite a while. Just looking at this thing on an hourly chart, I mean, it's just been, look, you had an ABCD, you had a 382, another ABCD here misses it by 2 pips. We're now down 2 handles from that level, and we're heading lower. You can see here, that's basically what we're watching here. So this doesn't look very good. There's our low back here, so it might hold this level, but we're going to find out that we're already breaking down. You can see here that if this 135 pattern right here, let's just draw it in. This 135 pattern has already failed. See, there it is right there. There's your 1, 3, and 5, and boom, bang. It's not, well, it hasn't quite. There's 1, 3, 5. Now it's starting to, no, this is, excuse me, 1, 3, 5. And now we're starting to break below it. This is not a good sign, folks. Like Jamie Dimon says, I only met the guy once, but he might be right. We'll see. Live every day in an attitude of gratitude, and may God bless. And we'll see you on the flip.